What's happening, everybody? I hope you all had a fantastic weekend. We have another Sunday video, this time the last one for July, and we're already into August by Tuesday. So hopefully you're having a fantastic summer so far. If not, reevaluate. I've gotten out there a little bit more this year, which is always, little baby steps just to try to check off boxes of goals that I've had. It's not always going to work, but I'm going to try my best, and so far it's been doing extremely well. In fact, on Friday, I had a plan to go to the water park with my kids and wife, and I covered Tup right before I left. And you know what? It's wiped up like 50, 60, 70 cents, 70, 80 cents. And that would have been a terrible way to end a Friday. Now, was it a good cover? Was it because I had to go? I don't know. Maybe a combination of both, right? And the main reason that I covered on something like Tup was because we knew the key level from Thursday was 270s. And if 270s is going to hold after it dips and rips back up and over it, that is a sign to me, hey, it should have died. It should have stayed heavy. We talk about that a lot each and every single week where, it should be proving you right, right? And when it flushes under that key level, which is supposed to trigger it down and that's it. Everybody's on the wrong side. It's traded enough above, enough shorts have covered that if it breaks this level, it should stay heavy and, begin to unwind. But if it slips under it, swipes right back up and over it and starts to kind of grind to 72, to 75, to 80s. Is that proving you right? Is that staying heavy under 270s? No, right? So I went ahead and started cover. And that was a high conviction trade. I had a lot. And had I not done that, I would have ruined the trade in a couple minutes. And it's a perfect example of everything that we talk about over the last couple weeks, months, where you're either going to be right or really, really wrong, right? And so in a situation like Tup, great entry right off open, 355, started to scale. And there was plenty of spots to cover. Technically, I typically would cover 270s on that first flush, the first attempt. But given the size that I had, given the average that I had, given the padding that I had, I was going to let it work, because if it does go, this is going to be a banner trade. It's going to be a big one, right? And I'm trying to build wealth here, not necessarily income in this case. And so anyway, it bounced 270s a bunch of times, and we talk about if it starts to flatline, if it should have stayed heavy, if it stays pretty much a flat line after 11 a.m., where's your risk? Where's your edge? And if they start to kind of get off a little bit from where they should be, where the risk starts to go up and the edge starts to go down, why are you still in full size? And so the last sort of checkbox for me was that dip and rip and starts to kind of grind over that key level, because everyone is likely doing the same thing. And it doesn't necessarily mean it has to be everybody, but sized shorts, heavily convicted shorts, people with a heavy bias with size are all doing the same thing. So when it stops doing what everybody is expecting it to do, there is a small window for you to make the right move. And if you don't, at the time where everybody realizes, oh, I should have covered. Oh man, it's holding 3 now. I'll just give it a little bit of room. Let me just see how it reacts at 310. Well, we know that 310 was the trigger. We know that 310 was the trigger on the downside, right? So that's why we always draw those lines. That's why we always remember them when it goes back and retests, because if it does not stuff at 310, it starts to build. Guess what? It's going to go up even faster. And that's just the way it is, because it's crowded. So that is small caps in this current market. That's how you have to think until something shifts, until something changes, until the market does not absorb and go higher every single day. Now, that will change at some point, but I'm not going to rush it to change. I'm not going to force it to change. And I'm not going to think that it doesn't make sense as to why it hasn't changed. Because every single day, the market gets absorbed and it goes higher until it doesn't. And when it doesn't, I will adapt and I will trade accordingly. For now, if you go to the market and think tomorrow's going to be different, why? 99% of these days, you're going to be losing money. So get rid of your preconceived kind of thoughts and all that stuff, and just come to the market and be a trader. So, as you guys know, all you have to do is like, subscribe, leave a key takeaway. Leave a key takeaway in the comment section or by retweeting. I gave you guys 2 examples of traders that just kind of put bullet points of their key takeaways, which I absolutely love seeing. Absolutely love seeing that kind of work ethic where you're literally, you don't need a pencil or a pen, but like you're literally typing out your key takeaways. And that helps me too, because now I know, hey, this was an aha moment for them. I want to focus on that next time. And so just think about that when you're watching these. You don't have to, everybody learns a little bit differently, but sometimes when you actually write down thoughts, they're going to stick and they're going to, check that box off for you faster. That's how I learned, growing up. I always had to take notes. My retention is very, I can remember every stock chart and price and everything like that, but give me a history book and I won't remember 5 minutes ago. So for those of you guys that are learning, everybody's different, but for me, typing out ideas, writing out ideas is going to make things click faster. A couple things that I wanted to focus on. Traders for a Cause Boston. Not the Vegas event, but Boston. We've got about, I think we're going to have 85 people or so that can go. There's about 30 tickets left. So if you guys would like to come, sign up. That's going to be great. That's right in Boston. And the reason we did that is you guys know Jack Kellogg. We've had him on a bunch of times. He's in the room and he's done an interview with us, and we trade together at times at the office. But he and the rest of the Clovers, they call themselves Clover Trading, are doing a boot camp in Boston. So they're giving 10% to Traders for a Cause. And so we parked ourselves right in front the day before their event starts so that any of their traders that want to come, plus any local, or heck, if you want to fly in from Florida, California, do it. We did have, I think it was Hugo, flew from somewhere in California to San Diego for that meetup, and then also flew from somewhere in California to New York for that meetup. So that's dedication. I absolutely love seeing that kind of stuff. So anyway, Traders for Cause Boston. The link is right on the blog post. So if you go in the description, click the link, you'll see that. There's also a link for Clover Bootcamp as well if you are interested in going, which I will be speaking at. A couple other things I just wanted to go over. One thing that made me kind of think about even my own self is, were you just part of a market cycle? And sometimes people confuse themselves with, being a good trader, right? And just being either lucky or a product of a bull market, a particular cycle, etc. Just because you made a bundle of money like 3 times on 3 different names and you scored 99% more than all these people that maybe just push buttons every single day. Does that mean that you're a good trader, or you just were at the right place at the right time? And it's really something to consider, because sometimes we get this bias or this conviction or this confidence that we know what we're doing, right? And so I've said multiple times that I've sized down like crazy this year. I think that things that I got away with in 2019, 2020, 2021, compared to what you can get away with now, it's a lot more slim, right? And liquidity is completely different. There's plenty of liquidity, don't get me wrong. However, on the high conviction trades, if you miss that liquidity opportunity, that's it, right? And it's very, very hard to cover. And TUP is a perfect example of that, where you could trade any size you really wanted to a certain point. Then it starts to base. As soon as it turns, that thing went on air, 270s to 350s. on air. If you had crazy size, you're not getting out. You know, and as soon as they started to sense that, because I had a decent sized position on there, once they started to sense that I was more than a couple thousand shares, and every time it kind of tried to break through me, it just absorbed. They started to kind of like almost front run that and started to firm up and firm up, firm up. So I started to have to take the offer instead of, and this is what I talk about, instead of like sitting there and, oh, I'm going to add liquidity. Well, was it worth 50 cent slippage? Or is it better just to swipe and pay the ECN fee? And so that's the difference in this market where you had that small window of opportunity. Back in 2019, 2020, 2021, you know, you have a lot more leeway. And just because you missed that spot, you know, you can still get out. So for me, you know, my goal this year was to kind of, you know, take a little bit of a step back, but also, you know, I just don't think that I could be trading the same way. You can outsize yourself in small caps and become your own risk. And, you know, I took a lot of, you know, what I made and did real estate investments and different things like that. And honestly, I don't know that I would still have all of that if I was as aggressive as I was in the prior years, just because you get in one liquidity trap, one issue, and it's an outlier loss. You know, just look at the people that lost on top, TOP. I mean, that is career changing. And that's just a sign of the times. Like, yeah, there was circuit halts back then, but they didn't skip as much as they do these days. And so I think it's just something to think about, because that is probably holding a lot of traders back. Where, no, but I've been profitable. I made money. I've made money in the past. That doesn't mean that you know what you're doing. And same thing with me. Just because I absolutely crushed it in the prior years does not mean that I'm going to be able to come back and do that same thing. Right now, guys like Lucas, for example, awesome swing trader market. Like, absolutely crushing it, building wealth over the longer term, letting these things work. And XPEV, NEO, and all these other names, just straight up huge trades. But intraday, there's great trades, but if you don't take it, it's right back up to the highs. So it gets very, very choppy. So had I done crazy size on CVNA and AI and all these other ones that potentially I would have been wrong, that could have got me caught in a situation that I wasn't prepared for, and, you know, have those outlier losses. So to me, I like to look back and just rezone in and focus on whether or not, you know, this is my style market or not. And I'm in no rush to you know, push. I'm waiting for the proper opportunities. I'm waiting for the setups like TUP on Friday. I'm waiting for the action like XPEV or any of these other Rivian type names to blow off and then take advantage of that. I don't need to force it every single day in and day out. And being aware of that and not forcing me to catch up or do or mimic what I did in years past is, in my opinion, beneficial for me, because I would be the type that just kind of like just throw good money after bad and end up, you know, in a hole. So understand what you're good at, understand if you were a product of a particular cycle, and be okay with it. See how you can work, see how you can better yourself to, you know, maybe your next, not necessarily the next cycle, but the next leg in your journey. Other than that, opportunity cost. TUP and XPEV, I think, were great examples. You know, so TUP on Thursday, I traded it a couple times early, and immediately huge stuff moves, like 2 or 3 times, like major, like, all right, that's it. That was the huge exchange. Slams down. This is support. Slams down to like right here, right? It absorbs. And what we know, because I've been a brokered record over the last however many Sunday videos, if it absorbs after that stuff move, it voids the stuff move. And so we had a couple examples 2 or 3 times on TUP. And I put that in the room. And I was like, hey, it absorbed here, voided. Huge stuff. Did you see that? Yeah? Okay, slams down. Oh, it absorbed, a void. And had you kind of built and see what it does, where are you? Right? just keeps on going. And XPEB was the same thing on the first day. XPEB, I made money off the open, then I lost twice. But the key was that I lost. I took it off. I didn't fight it. I didn't see what it was going to do. I started in. I had my starter. I was wrong. I'm not going to scale into a loser. I thought it was going to stay heavy. It proved me wrong. I'm moving on. Tried it again. Proved me wrong. Waited. Then rips up, and I think it was 2060s, something like that, or 2160s, something like that. And then it failed to follow through, and it confirmed, and it gave the great trade. I would not have had that great trade if I did not behave the prior 2 times. So make sure that when it does something that is against what you were expecting, but you're sized up for that trade to be right, make sure that you size down, because you will not capture the top on Friday or the XPEV after the unwind because you took that opportunity away, right? You're exhausted, you blew out, you stopped out, max stop, whatever. If you take that opportunity away, not only have you lost on the way up, but you've taken away the ability to trade on the backside of the move. So it's a double whammy. You're hitting yourself twice. Small cap crowd and voids, we talked about that. PTSD, I had some PTSD on UFAB. It's always scary. It just, like, I've been in so many halts, and anything that even like could halt, even like the EDTX that I got stuck in. I've got a couple hundred shares. Like, I'm not trading those size. I'll borrow 1,000 to 2,000 shares, but just in case, you never know which one could be the next HKD, right? So UFAB though, I don't necessarily put in that same halt category, and it's just always scary. When it halts for news, and I knew they had the news that said there was trading activity, no reason for it, etc. But it still does just enough to make you like think, well, what if nobody cares? Then it opens 60, it goes into a circuit, goes to 80, goes to $1, and if I've got a 250,000 shares short and we go up $2, like, that sucks. And it's all possible, and that's the thing. So I always have that PTSD. So I was happy when it opened up and pulled back. So anyway, the last 2 things, Traders for a Cause Vegas. There's 5, maybe 7. I'm gonna guess by the time this is airing, there's gonna be 5 tickets left. So that's awesome. There is some dinners. Me, Lance, and Zach is sold out, but I think we might add some more dinners. For those of you guys that are going, feel free to leave in the comment section, some folks that you'd be interested in having a dinner with, and maybe I can pitch them on a particular donation and make it work. And then last but not least, the X, it's not Twitter anymore, X Spaces replay with Kim Ann Curtin. I thought it was a good conversation. Me and Sam and Kim, and she was giving some questions. We took some questions from the audience, but just something to kind of think about and reevaluate your own trading, your own mindset, and all that stuff. And as I've said, I've been working with Kim, and for me, it's more of the accountability and making sure that I check off those boxes. It's just something that I'm not good at. I know I want to do all these things, but I'll just do everything 90% and never actually check it off. So I think it's been good, but it's just, even if you don't pursue it, at least check it out. At least kind of ask yourself those same questions about mindset and things that we talked about on the Spaces. Because a lot of times you might actually realize, you're going this way, but really your true passion, your true goals is this way. But, you're kind of following somebody else that's doing that. Everybody always wants to follow whatever's working and whoever's doing well or all that kind of stuff. But really, once, even if you don't get there, but like even once you get there though, you're going to look back and be like, I should have stayed, this path. And so that's really about it. Let's see. Some other notes. We talked about TUP. I think that's about it. Yeah. So let's get into scan for the week ahead.
Listen up. We're about to go to the plans for the week.
All right, so for the second part of Scan, as always, I am not a financial advisor. These are not buy or sell recommendations, and this is for educational and informational purposes only. If you're not okay with that, shut the video off. If you're good with that and you want some tidbits, what you can apply, strategies and things like that you can use on Monday and for the week ahead and for the years ahead, then you're in the right spot. But if you want somebody to tell you what to buy or sell, not happening. So, all right, TUP. As you guys know, fantastic trade on Friday. Posted it, and we had a nice setup. You know, I always like to go back and kind of review, even if it's in hindsight. You know, even if I took the trade or didn't take the trade, it's still all the same stuff, and I just want you guys to see it, you know, repetitively, over and over. So, some of the levels that were of interest, and this is on the broadcast call. So every morning I do the broadcast at 8:50 a.m. and talk about, you know, what would make me take the trade, what I need to see, what are the key levels, where I need to see it confirm, where I need to see it fail. And if that checks out and turns into a trade for you, then you get it. If it doesn't, then you shouldn't be in the trade anyway. And that's where a lot of people, you know, go wrong. They just want somebody to tell them what to do, when to enter, and they don't actually understand the trade. So if you did not take a trade on TUP because it wasn't fully clear to you, you didn't understand that ideal trade would be some sort of exhaustion move versus the pre-market highs, then you don't deserve pushing those buttons. And the problem is most people would if they were told to. So the idea is to go back and say, hey, how come I didn't have the confidence to push those buttons at that time? How can I participate maybe with 50 shares, 100 shares? How can I participate to get involved, get a feel for what's going on, and kind of expand your horizons as a trader? So I always like to go back. Like I said, sometimes I'll, you know, spend time in the lounge going over trades I didn't even make, but just to show, like, hey, here's the setup on a $50 stock. Here's the setup on a 30, a 20, a 10, a dollar. And so that you can start to see it in different situations, so that when you see it on your own, you can make that trade by yourself and not have to have somebody tell you, because nobody should ever be telling you what to do, what buttons to push. So, you know, for me, as you saw on the chart, I started in, it was an exhaustion move. If this started to firm up 360s, then I'm in the starter position. I am going to decide whether I'm going to go ahead and bail if 360 starts to firm up and go, or do I stick with it? Do I stick with it and wait and kind of see what happens? But since it started to peak out, multiple exhaustion moves, I continued to scale into the trade. Now, let's look back and see how that looked, right? So we had 270. We knew 270 was key. And we knew 310s was key. And so when we exhausted back out, so I knew this 310 level was going to be a big level because of the prior days. If I can get back there we go. So you can see 270s here. You can see 310 consolidation, peaks out. Then it breaks over it early, comes back. And you can see these dip spots all at 310. So I knew after it exhausted out, there's a good chance that we were going to unwind back down to the next level. Now we dipped under and we ripped right back with volume, right? So we dip, rip, and then we checked in again, higher lows, dip and rip, starts to grind. So let's see, you had 10, 15 minutes to make the right decision. Doesn't mean you're going to take it all off, but you had 15 minutes to make a proper decision. Am I too sized? Should I adjust? And if you didn't, you minimize the trade. Still great trade, but you stuck around. I'll see what it does. Let it test 310. Forgetting that's a huge trigger if it does not stuff there. Boom. Right back through 340s, exhaust out, comes back down. So, perfect example of how lines create triggers, you know, whether it's a squeeze, a stuff, and a flush, and how you need to kind of think. So that's why I covered, you know, I wanted to be patient. I wanted to let that trade work. But I know the only reason to be patient and not proactive is if under 270s stuffs. And it doesn't mean it goes 268. Okay, we're confirmed. We broke 270. That's not what a confirmation is. 265 comes back, stuffs 270s, 260s, 268, stuffs, starts to fail to follow through. That is a confirmation. First swipe back over 270s, confirmed, reclaimed right away. That voids any of the unwind. So, ideally, come Monday, reactive trade, ideally, we're pushing 340s, use that as sort of a guide. I'm thinking it might gap down a little bit, maybe 290s, 3s. If so, I want to start in any good fast push 310 to 340s. And then failed follow through. Patience under 270s. That's the spot where shorts have all been kind of squeezed out and then longs start to get a pretty heavy bag. QS is a great example of the ones that we talk about, a transitional day. And I would have bet money that it would have faded on Friday, on Thursday. I think I actually said, it was super heavy. And it's a perfect example of what I'm talking about on a transitional day. Meaning, huge move, somebody positions in that day, and then it just fades all day, right? So if you were price sensitive, and this is why, you kind of have to have that understanding that weakness, pullback, unwind is not necessarily bearish in this market anymore, right? Sometimes it's just profit taking, and then, anybody that's price sensitive is going at, selling. Dip buyers selling. Shorts, confidence is going up, right? Easy money, easy money, easy money, easy money. And then, I didn't plan for this. Oh man, it gapped up. It's holding over VWAP. Do I add? They add, and then they get blown back out towards, this level. So transitional day to me is that day where it gaps up. It encourages anybody that's price sensitive to sell. And then after that, it starts its new trend. So we had a nice breakout. There could be a lot of longevity here, so I want to be cautious. This was that day that anybody that was on the fence for selling probably is gone. And there's a new round of buyers. Just looking at the volume, this is when a new round of buyers has entered into the position. We've seen it multiple times. PLTR, look at this volume, right? And we broke over this prior level of resistance. We dipped and ripped, came back, and then, we never looked back. I think you'll see the same thing with CVNA. Gap over that level. It faded. It actually faded this day. Very similar candle, right? Gaps up huge, fades off, transitional day, and then guess what? Onward and upward. So, what I'm saying is that on this one, on QS, it is possible that this is the new long-term bottom. Now, I'm not saying that, it can't pull back a buck or two, and I'm not saying that I wouldn't short it. I definitely probably would, and I definitely would watch it if the market pulls back. However, to me, it feels like this is that new kind of base for the next 6, 12, 18 months, something like that. Just like you saw on IONQ, Rivian, all these different types of moves. So keep that in mind. Just because it's up a lot, pay attention to the volume. And those 2 days of volume, if you wanted to sell, you're out, right? So now all that's left is new investors, shorts, and maybe a couple people on the fence still. So just be aware, if you have too much of a bias in one direction, that's when you get in trouble. So I guess on QS, reactive trade, gap up, reactive trade, fade, weak open, flushes, I'd be looking for a red to green move. Be prepared for both. Same thing, XPEV and NEO. We got to see what happens. These things are in full breakout mode. So if there's a huge gap and it squeezes out, I'm very focused on an XPEV style move where it does a nice mean reversion type setup. So I'm not going in on Monday and saying this is what I want to trade and this is exactly where I want to see it. We got to see. Are we going to have a weak open? Are we going to have a huge gap up? And by 850, I'll have a good game plan on these, in my opinion. So we'll see. But, these things almost both doubled near term. I mean, NEO are not doubled, 50%. But be patient. Be cautious. Volume is great. These are trader names. They're not, if you come and you have this heavy conviction that it has to unwind, I think you're going to minimize the trade a lot. So just be aware of that. And also don't be afraid if there's a long setup, Don't be afraid of how much they've run. Just follow your risk management. But there's still a lot of long side opportunities on all of these. Under the failed follow through section, I have Rivian just in case. Just feel like it's been relatively heavy compared to its peers. Over this level, though, I'd be cautious. So, I would maybe put a price alert at 27.10, 27.20 just to remind you that if you get that alert, hey, price alert hit 27.20, and you're sized up on the short side, maybe it'll be a good reminder, like reevaluate. Should I go back to a starter? Is this really a good idea right now? And a lot of times you'll probably answer no. So be cautious. APLD and AAOI I would have in the same sort of camps, just to not forget about. They don't necessarily need to pull back. GSIT did something similar, and then it faded maybe like 2-3 weeks later. So I'm not saying AAOI for Monday. I'm saying put some price alerts out there. Don't forget about it. And in a week or two, you might have a nice $1 or $2 pullback again. APLD, same deal. Yet another hit piece. I think it's like the 87th, 88th one that's come out on it. Not really. There's probably been 5 or 6 though. And each time it just absorbs it. We've talked about, I think it was 780 being like a key chart level, and every single time it flushes under there, it ends up coming back pretty well. So I think it's pretty obvious that we've got a little bit of resistance in this 1020 to 1050 range, I would say, looking left. So keeping that in mind, a lot of times I think that shorts get a little too aggressive down here and then they panic up here. So, so far it's just been the invisible hand, whomever the fund is, whoever they is in this situation where it's trap, 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 exit, 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 cover, cover, exit, exit, load, 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 exit, exit, repeat, So until that stops working, it'll keep working. And so just be aware of that. The edge here is not having the FOMO and chasing this name down. Every time it does that, it ramps back up. So watch strength and big exchanges. And that's been the name of the game for this one. UFAB flushed down at the bell and came back a little bit, I think. Nope, I guess it stayed down. But big one, really big opportunity. I will go back to this. It could go right back to 20 cents or teens. So just keep that in mind. Sometimes people take it off radar after that. I keep it on radar. ENVX and Overstock, just on radar. Put some price alerts. You can kind of see on the daily chart how they've been kind of hanging out. And this ENVX is right back to support over here. So I'd probably have a price alert, maybe 1880s and maybe 2010s and 2050s, something like that. Just to kind of know when it breaks out of that level, look for an exhaustion move. When it breaks down, potential heavy for an unwind. But these have both been heavily promoted on Twitter, Overstock as well, super retail crowded, but they're working, and the early shorts got squeezed. So I just think that there's going to be good multi-dollar opportunities here. I'm not ready to trade them on Monday. Like, I don't have this, I got to trade it mentality, but I just think there's going to be good opportunities soon. So I don't want to lose them off of radar. And the same deal with Clue. I don't need to be a broken record. If you guys have been paying attention, my thought process there. It's got an effect. Doesn't mean that it has to raise right away, but watch. And if and when they do, we know how that works out. We've seen it before. We've also seen what they can do, So TC, very similar situation. And then, it just absolutely gets demolished. KC, nice daily chart breakout, potential setup. Huge move, huge unwind. Now we're consolidating, and you can kind of see that we're starting to break out over this prior level. It's the same situation for a lot of these China names, China breakouts. They always kind of do the same kind of thing, and they always go further than you can even imagine, too, on the breakout. They're all sort of lining up in the same sort of light. EDU is also a recent one, too. Same kind of, just looking at this top. and away it went. And I think there was too, same situation that we've had talked about, this big level. So kind of see how it's doing that over each high. Has been a great breakout move. So just staying familiar, but KC is setting up in the same way. So if it starts to base over here, you could have that next move towards 9 or something like that. FENY, so far it's a bag hold for me. I had a good entry. I was up a lot, over here, and I just let it work. Now I'm down like a dime. So we'll see what happens with that. And then FIXX, notable strength. I'd be watching dips. If it starts to base versus, this 120 level, then I'm interested. But otherwise, I'm not really too excited about it. So my focus lately has been 2 or 3 names off the open. They either work or they don't work. Hands off, be patient, wait for a good setup. Trying to trade less, trying to not, just force an idea to work. It's either paying me or I'm waiting on the sidelines for a better setup. So anyway, catch you guys in the room tomorrow. If you guys have any questions at all, you can always leave a comment in the comment section, contact off the page. But if you're not in the room, I hope to see you in the room. Even if you've been in the room in the past and you haven't been in the last year, it's insane how many new features we have, including scanners. So we are way behind on updating the website and all of that. So I think it's kind of a nice surprise for people to come in. They're like, they purchase a subscription and they're expecting one thing, and they come in and they're like, whoa, I wasn't expecting all of this. So I think it's a nice surprise for a lot of people just because we haven't really showcased everything that we have. But that's a work in progress. That's coming at some point. But anyway, see you guys tomorrow and have a good rest of the weekend.